Welcome to Trading Nation, folks. Check out the consumer staples chart. It's been on a tear. The sector's up 1% Thursday, thanks in part to Walmart, which was up more than 8% in the session. The group now on track for its best month since February. Are there more gains ahead? Larry McDonald and Kim Forrest are here today. They are your Trading Nation traders. Larry, you say staples could be a major catch-up trade into year-end. Let's talk more about that.
Well, especially over the next 6 months. Well, first you have the tax loss selling issue that we've been talking about. But most importantly, the underperformance of this sector is almost 10% since June versus the S&P. And you have a situation where if the market corrects because of this tax bill running into some problems over the next month or so, and say it gets pushed back, as the market rolls over and goes into some type of correction, that's when, historically, that's when this sector, the defensive stocks, dramatically outperform. So it's a safe place to be in a storm, and it's a great place to be year-end tax loss selling, and if the market rolls, you're going to outperform the S&P quite dramatically.
Kim, I know at your firm, you tend to look at things from a value-oriented point of view. Where's the value right now in consumer?
Well, the value right now is being left behind by investors. I mean, let's just say that. The S&P and the Qs have been driven by the big five, FANG plus Microsoft, and let's not forget that. I think we've seen a rebound recently in things like staples and utilities because the people who are leaving GE and who were in GE for the dividend are looking for a home for that money where it is going to return dividends. And typically staples and utilities, for that matter, are two places where you can get kind of steady Eddie, or so investors think, returns or dividends paid out to you. That being said, you know, I would love it that value would come back in style, and a market that does nothing that goes up is not going to give us that. So, you know, looking into the future, I'd be happy if Larry's thesis comes to pass. But at this point, the market marches higher, and it really is driven a lot by those that top five, you know, market cap stocks.
I'm going to throw a curveball to both of you guys because I was having a chat at my desk with some other CNBC folks, and there was this question about, do people buy the stocks of the companies that they shop at? You know what I mean? So if you're a Walmart shopper, are you more likely to buy Walmart the stock? Is that something you guys have ever thought about, researched, traded on? I'm just curious both your perspectives on that.
Who do you want to start?
Whoever is more confident enough to jump in with the answer first.
Okay.
Go ahead, Kim.
Well, you know, even though I don't necessarily have clients, but I talk to our clients, and I generally get to answer their question about, I like this company, can I buy the stock? So I would say yes, that generally the retail investor is more likely to buy companies that they've actually dealt with. So that I agree with that.
Larry, what about you?
Well, for young people watching us right now, I think one of the great lessons of my career on Wall Street has been around this subject. And through your life, especially as a young person, something comes at you like a new product, or like a, you know, you see lines in front of Chipotle, say 4 or 5 years ago, and a lot of times you take it for granted and you don't pay enough attention to it. And typically, when you see that in life, when you see that new product that you're using, or when you see something unusual in the marketplace, buy the stock, because most times you'll be fairly early and capitalize quite brilliantly over time. Is
there something, Larry, that sticks out to you as a company right now in the consumer space that you think, oh, you know, this is actually doing really well or really poorly, the stock price doesn't match that, I think there's a trade here?
Well, yes, in the electric vehicle space, you've got things like uranium. I mean, the amount of electric vehicles that are coming into the marketplace over the next 10 years globally is just a very, very daunting task, and you're going to need many more nuclear power plants globally to meet that demand for electricity that comes from electric vehicles. So uranium and trades in that space, that's what I'd be focused on is really electric vehicles and anything in that electric vehicle supply chain, demand chain.
Kim, what about you? Is there something, going back to that previous question, is there a company that you notice just from your personal shopping experience or whatever it is in that consumer space that you think about as, oh, I go here a lot, or my clients are talking about this a lot, but the stock's not there? Is there a name that we can talk to our traders about?
I'm going to do the opposite. Can I do the opposite?
Yeah, you can do the opposite, sure.
Okay, so I'm a contrarian by nature.
That's good. We like that here on Trading Nation.
Yeah,
That's
it is. It's really lonely, though, because I'm going to float this out there, and you're going to go, oh, this is a terrible idea. So what I've noticed on my time in Wall Street is Wall Street has a certain lifestyle, and they have certain products, and they invest in them. And Amazon is one of those products. And I'm going to say Amazon is probably not the last store on earth. It really isn't. I think consumers like novelty and they like the convenience of having stuff delivered. But I'm going to say retail is one of the easiest things for somebody to set up, right? I mean, kids set up a lemonade stand all the time and, you know, boom, they're in business. So I would not count out retail by being lazy and saying, well, I'm going to buy Amazon because Amazon's going to take over the world. So I don't know, you know, I'm not saying let's short Amazon at this point. I'm just saying be on the lookout for that next big thing because it's going to come along and Amazon's going to have competition.
I like that. Yeah, I think the answer could have gone either way. Is there just a stock, a stock relative to the shopping experience that seemed to mismatch? I think Amazon's a good answer there.
And Eric, I forgot to mention in uranium,
we're back to uranium again. I like we have Amazon and uranium in a segment that started as consumer staples. I have clearly done something wrong leading this
I
discussion.
just forgot to mention the ETF is URA because that's the uranium space.
Okay, I liked it. The uranium, I wasn't expecting that today. The Amazon one I like. That's a good contrarian one because that goes to the point that you're right, especially Wall Street, it's a very urban New York City, San Francisco type of culture. A lot of people live in apartments. Amazon works if it's going to get dropped off at your doorman. All of a sudden, like you're like me, you moved to a house in the suburbs a month ago, and now Amazon is a much more difficult issue because there's just boxes piling up on your front porch, and God help you if you want to return it because the doorman's not holding it for you to give it back to the UPS guy. So I know what you're saying. It is a different world if you're not part of that Wall Street community.
It is.
So, well, anyway, this has been a good chat.
Thank you.
It went in a different direction here, but I think we all learned some stuff. So my thanks to Larry McDonald, Kim Forrest for joining us here on Trading Nation. I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.